of July. We're going to wrap up the final week of trading for the month. We have a busy week with lots of earnings and the Fed. So let's dive into the risk disclaimer. We understand as risk in trading, please and always use trade capital only. Do not trade with money you cannot afford to lose. If you're following me out there on social media, make sure you're following the real me, youtube.com/Chris Pulver, Mondays and Fridays at 9 a.m. And my handles elsewhere, real Chris Pulver. No letters, no underscores, no hyphens, no periods. I'm not direct messaging anybody. I will reply if you message me, but everybody else is probably scammers, and it's probably crypto crap. So anyway, make sure you follow the real me on social media. Okie dokie. All right. Hey, everybody. Happy Monday. Let's get to it. If you're out there typing a wire, yes, everything's coming through loud and clear. Let's go. Where are we at? Where are we at? So this is last week's movers. Everything was in green. We steadied the ship a little bit. I think for the month of July so far, the market's S&P 500 is up about 5%. For last week's movement, Dow Jones up 1.95, S&P up 2.55, Nasdaq up 3.33, and Bitcoin back above the 20,000 mark, sitting around 22 and change. Where we are for the year, still down. The 10-year note, well off the highs at 3.5. We're down to 2.75. Interesting correlations we talked about. I'll review those from last Friday. Nasdaq still down over 20% for the year at 24.36. S&P, the peak, I believe, the trough was 24% or just shy of that. We're at 16.88, still to the downside. The Dow, negative 12.22. Bitcoin is down 51% for the year. Netflix and others in tech, 60, 70, 80% for the year. We're going to take a look at ARK this morning as well. So a couple things we talked about on Friday. This chart right here. So what this is showing is some similar S&P behavior from 1962, 1970, and kind of projecting where this may be similar to 2022. I went back last week on Friday. We talked about some periods in the 70s where we had peak inflation and a bottom in equities. We also have a peak in the 2-year Treasury yield and a bottom in equities. That was in 1994. So, I'm just putting the years together. 1962, 1970, 1994, 1980, and 83. That's 5 references we can go back and say, you know what? We might see some similarities in how those years played out going into 2022. Now, like I said, the Fed is this week, and that will be on Wednesday at 2 p.m. This is what the projected. Let me refresh this and see if these percentages changed at all. It's about the same. So the market is forecasting a 77.5% probability that the Fed will raise rates this Wednesday, 75 basis points. And we'll see if that is unanimous. We'll see if there is any type of dissenting opinion. We'll see where the Fed's at as far as their hawkishness or neutrality or dovishness. We'll find out. But it looks like we're going to have a 75 basis points hike, which will take the official cash rate up to 2.25. We go to cbrates.com. Other central banks are looking to raise rates. We've seen rates from Australia be raised. We've seen rates from Canada be raised. We've seen the UK raise rates. We saw the Eurozone for the first time in over 10 years raise rates to now 0.5%. Here is the Eurozone at 0.5. Even though they did just unveil a TPI program, which is another bond purchasing program for countries in need, like Italy right now. But we are seeing most central banks raising rates. A few are cutting. So Turkey's been cutting rates. Russia's been cutting rates. Japan has stayed the same. I was going to say they cut rates back in 2016 and haven't changed. So nothing's changed on a Bank Japan. Let's see here. Everyone else is pretty much raising rates. And the Fed, are they going to be the strongest in land? No, you still have New Zealand, which is sitting at 2.5%, which is still higher than the U.S., and looking to raise rates again. You have Canada sitting at 2.5%, which is ahead of the U.S. So rates are still on the table for other central banks, but with the big bad dollar right now and getting strength, here's what I think. Okay, I said this last week, and I've told everybody this in my trading room. If the market's going to find a way to fight back this year, meaning we've never had a year where the market bottomed December 31st. All right, usually it's like a first half of the year is down from peak to trough, and then the market fights back at some point. So let's say our S&P was down 24%. If it fights back and gets back to, let's say, negative on the year, but it fights back to like negative 12%, negative 10%, something like that. That's still an effort to rally for the end of the year. Okay? Going to the similarities of the years I mentioned, 1962, 1970, 1981 and 83, and 1994. what we may end up seeing out of those is, for right now, with a heavy earnings season right in front of us, like this week, there's tons of earnings plus the Fed. The one thing, let me see if I can find this chart because I don't think I saved it. Let me do, where is it? Here it is. This guy. Let me take a screenshot of this and I will post this chart, or we'll take a look at this. It is the S&P overlaid with S&P forward earnings. And that is what I think is being talked about right now. Because to me, this makes sense for a potential another flush down. Now, it doesn't mean we have to make new lows because we're off of those lows, but I could see the market flushing back down to try to test some of those lows. If the Fed comes out with 75 basis points and maybe hints at another hawkish, 75 basis points in September, it's probably not a good thing right now in the near term because those interest rates continue to change aggressively. So right here in orange is the S&P 500. We've seen stocks dip from, late last year in November all the way to the first half of the year. Now, the earnings in white has not caught up, and this chart was up to last week. So if earnings start to catch up or realign, right? You see how they've done that here? Stocks led the decline, earnings dipped. Stocks led the decline, earnings dip. Stocks led the decline, earnings dipped. Stocks led the decline. I would imagine that earnings dip. Now, whether we go lower in stocks yet, we don't know. This is what we discussed last week. Okay? But I do think that we will have an earnings, it's called earnings compression. If we start to see another dip in contraction in earnings, does that flush the market down another leg? Maybe. Maybe we finish the month of July on a flat note. Maybe it's in red. Maybe August is another terrible month for transitioning. And we'll see how we get out of it, post-August or September. Maybe all this is going to get ugly until September. And it's going to be, kind of the 11th hour of the Fed's going to have to navigate, all this inflation stuff until September. Then October, November, December, the market just rallies because it wants to. Again, nothing that I'm talking about, nothing that the market does has to make sense. Right? It can be totally irrational. That's what's been so confusing about this year is you're trying to make sense of things that are totally out of your control. All you can do is trade size, risk management, and try to pick some winners, and manage your losers. That's literally all you can do. So it's certainly been an interesting year. We've navigated it to the best of our ability, and there's certainly room for improvement. But at the same token, I think there's plenty of opportunity ahead. And I'm actually pretty optimistic, and I'm pretty excited for what opportunities do lay around the corner, provided you're, picking some good stocks up and, trading the right currencies and look for the right technicals. So that is that. Let me log into the page and see who's out there. Say what up to everybody. Let's get after it. And then we'll go into some charts. All right, so we are live.
What do I want?
And Donna's in the house. Jason's in the house. Chris is here. Don is here. Wayne, Sterling, what's happening? Happy Monday. Joseph, Scott, Tom, good morning. All right, Daniel, good morning. Steve, good morning. Nice to see everybody. All right, we're good. Cool. All right, thanks a lot. Let's take a look. Let's get to the chart. So here is the S&P E-mini futures, pretty indecisive on the day. I did have some projections last week that once we cross this high, we'd be running up into 4,000 on the S&P 500. Mission accomplished. We did hit it. So there is going to be some resistance here. Okay, now if we continue to push higher than that, then I will be looking to see if we get back to this 4,200, which is challenging these highs from June. I think this week is really a toss-up week depending on how the market digests the Fed's comments and press conference. I mean, the good thing is the market already knows that the Fed is probably going to raise rates by 75 basis points. I doubt they're going to raise it by 1%. Reason why is we keep seeing gas prices go down at the pump. We keep seeing housing prices go down. We keep seeing auto sales go down. We keep seeing these contractions and this, this decrease in spending. Okay. We also are seeing core inflation going down. Headline inflation remains high because of food and energy costs. There's some stuff going on right now with Russia, Ukraine trying to get some grain exports out, which would free that up instead of this big food crisis and supply chain issue. Maybe that helps alleviate some of the concerns. So I think for the most part, the market is already ready to digest this rate decision for the Fed. The question is, what's the Fed's forward guidance? What are they doing in September? So is this week going to look like this, or is this week going to look like this? Now, on top of the Fed, if you piggyback on top of the Fed, 780 companies this week that report earnings. Well, we'll see how that stacks up as well. Because fundamentally, if we have a poor earnings week, I could see the market getting dragged back down. All right. If this is still a bear market rally, we're right here on this 50 EMA. We have some open space for a correction back into around 4,200. That's just based on some technicals. But if this is all we get to do is a little correction right in here, and the bulls have had their fun, and the bears are like, okay, that's cute. Welcome back to reality. And then the bears take back over and resume this downtrend, right? We've had high to low, lower high to lower low, lower high to lower low, lower high to lower low. So the bears might come in and say, hey, good try, but not good enough. So they get flushed back down. Now, having said that, let's say that the market is going to dip this week. Okay. I don't know if it's enough to take out this low. If it is, that's another steep decline. We're going to be in new, deeper red territories for the week or for the next month. I mean, this could obviously take longer than just this week. But if we have another push lower, that would require about an 8.5% move to the downside. So we'd have to see the S&P drop 8.5% to take out these lows. So I could see there being 3 to 5%, somewhere in between here, maybe 3 to 5% to the upside, 3 to 5% to the downside. Since we've had the low, I'm not sure if we've come back double digits or not. We've had the low, we rallied back just shy of 10%. So keep in mind that even though we had bear markets in 2000, 2001, bear markets in 2007, 2008, part of 2009 until we bottomed, we still have these 7 to 10% up moves, right? So there's still opportunity. But anyway, I think it's a 50-50 week. We'll see what the market digests with the Fed. We'll see what earnings looks like this week because there's tons of them. I think if you are in tech, you saw what happened to Snapchat last week. Snapchat's terrible earnings and terrible guidance moving forward brought down Facebook, brought down Meta, brought down I think Google as well. So that's a big hit as far as the market selling off last week, but they still maintained a decent rally for the week because we started out so firm on Monday, Tuesday, Wednesday. Okay. All right, good stuff. So anyway, that's the S&P. Let's get into the currency strength this morning. We see a little bit lighter on the volatility, but some standouts here. The Swiss and the yen, extremely soft this morning. I'm not complaining. Obviously, the yen I don't like, but I did take some profit last week on the Cad Yen. Got some trades in around 106.08, 105.90, and took that down to the lows of the day, and that was Friday. So we just had like a nice steady sell-off on the Cad Yen, came all the way down to lows around 105.30. It looks like we had a gap lower. While we opened, we flushed down a little bit lower towards 105.11. I was out of the trade on Friday around 105.50. So I ended up grabbing about 110, 120 pips on the group. I got 3 entries in, grabbed some pips, and I'm out now. But I'm still looking for a rising wedge. I'm still looking for a transition and a high to form. And some of these really nice bar counts that I see in these extremes on these yen crosses, I'm looking to see them realign. Dollar yen looks like we're still trying to push back up. We had a nice little flush lower last week. I'm watching technicals. It's really simple. We hit the 50 EMA and a monthly pivot. That's right around 134. We break below that. I'm looking for this to come back and revisit this level around 127 and find this very overextended bar count on this 200 EMA. Now, we might look at this and say, wow, that's a ton of distance. And it is. And how the heck is that going to happen with the Fed raising rates and the BOJ not touching rates? I don't know. I don't know if it's going to be just the shift, because I still think for the S&P 500 and the overall U.S. markets to rally, I think for Bitcoin to rally, I think the dollar has to drop. And in order to get that, I do have a correlation here. We talked about this last week. Let me find that chart. I think it's in here somewhere. It should be an S&P 500. Here's an interesting chart. We talked about this last week as well in the trading rooms. So I put this chart together. This is CPI year over year compared to the dollar index compared to the S&P. Okay. Now, where we are at so far, the dollar has been up. Okay. CPI has been up, but core CPI has been dipping. S&P has been dipping. So in order for these to reverse courses, if we're going to see CPI drop, the dollar, well, the dollar doesn't necessarily have to drop, but I do think if CPI is going to drop, that will help the S&P rally. What I want to show you is this correlation for the last, at least the last 10 years. It's Bitcoin, S&P 500, and the dollar. Let me see if I can find that. So that is, this is that was the CPI right there. I talked about this last week in the trading rooms. So this is the peak CPI in the 70s. So peak CPI there and bottom in equities, peak CPI there, and shortly after bottom in equities. Some study stuff, Bitcoin versus, let's see, That's how I spent my weekend studying. So that was a blast. If I can't find it, it's in my email. All right, I'll just find it in my email. Never mind. It's right here. There it is. Right here. So this is Bitcoin versus the dollar versus the S&P. And the takeaway from this, I know it looks like a noisy chart, but if the dollar goes down, that is the best environment for Bitcoin and equities to rally, right? Dollar goes sideways, Bitcoin went up, S&P went up. Dollar goes up, Bitcoin goes down, equities go sideways or down. Dollar goes down, Bitcoin goes up, equities go up. So, like I said, for this year, if we're going to see a Q4 rally, if the market's going to fight back at all this year, if Bitcoin's going to come off those support levels at 20,000, it's probably going to have to be with a weaker dollar because that is the strongest correlation for risk appetite. Weaker dollar, risk appetite. And equities and Bitcoin are very much risk on, risk appetite trading right now, right? And again, it may not be until the end of the year. It might be October when we have, more news on CPI, more news on Russia, Ukraine, more news on supply chains, more ways to get things fixed and resolved. And we will really see if the Fed is going to continue to stay on this aggressive rate hike cycle or if they're going to tone things down towards the end of the year. Because I think that's all the market's looking for. Okay. All right. Good stuff. Good. Yep. All right. Any requests, any charts you'd like to take a look at? I'm just going to breeze through some of these. I know stock wise, we've got some stuff to manage. Let me check my equities on demand for 29th expiration. 7.29. I think we have a few. 5 expirations. TAL, that is a credit spread on, I think that's a China education firm. And we have a Delta Airlines. I have a covered call as well as a credit spread. I think we rolled that credit spread. We can check that. And then SLV, some credit spreads as well. And FXI, that's large China tech. So we have a few credit spreads to manage this week. I have lots of covered calls to add back in. Did take some profit on Carvana last week. Took some profit on Meta. It was Facebook, but Meta. And then also I want to get some trades back in on MicroStrategy. We're trading at 274. We closed last week at 281. So I had a 290 call. I'm going to come right back in and probably do a 290 call or 285 call and just kind of try to get as much premium as I can, lower my cost basis. My break even right now is 278. So if I can keep repairing it, great. I'll try to get out for this week. And again, there's plenty of stock movement here. We're breaking above the 50. If we consolidate, it should be heading up to this 144 and 200 EMA. All right. So that's what I'm looking at in the stock side of things. Currency-wise, let's go dollar, oil, gold, silver. So dollar index is actually looking pretty decent to the downside. Hopefully we find this 50 EMA, find this monthly pivot, start to break down these trend lines, find this bar count. 200 EMA is what I'm looking at for some corrections. DXY, showing the same things, 50 EMA, 144 and 200. I'm telling you, I wouldn't be surprised this week. I don't care the Fed's on Wednesday, right? If the market is going to flush this thing down, we still have Monday, Tuesday, and half of trading day Wednesday to get this down to the 50 period. Now, we could be there prior to the Fed, and then the Fed delivers a bunch of noise, and then the noise settles, and we still make our correction, right? We could come down to the 50 EMA, come all the way and bounce back up on the Fed. And it just shows like, all right, now is not the time for that top to form, but maybe it's up here, right? And it comes back later. So I still keep going off of the technicals. I think this is a potential rising wedge on these dollar index pairs. We have a lot of looking rising wedges on yen crosses. So if this structure breaks and we get below this 50 period, I'm looking for some consolidation and correction. It looks very similar to oil. What I'd be watching is this. Can the dollar index, can the DXY correct like oil did? Okay, so we had this big runaway move. We have this high. We have this high. We broke below it. Okay, consolidated and then drop back down to find that correction. That's what I'm looking for, right? So if the dollar index does that, we're going to see a pretty big shift, and I think that's how the market will start shifting into equities. We start seeing a weaker dollar, I think there's risk appetite flowing in. But with earnings compression, that's a potential threat. I could see the dollar staying pretty resilient for right now until, maybe August into September, until the market's ready to really rip. Right, so that's oil, that's dollar index. Let's go Bitcoin for a moment. Ethereum, they've had a nice little run. We found this monthly pivot combo here. We had a weekly and monthly pivot. We have still plenty of pocket levels to come back to on Bitcoin. We're on the right-hand side of the trend line. We will see. This is kind of a tough spot right here. If that's nothing more than a correction, a little channel, this does have kind of a bear flag structure written all over it. So I'm a little apprehensive just to say, hey, let's go bullish on Bitcoin. But I mean, we had plenty of chances to buy this right around 20K, which is a strong support level. I still think at the back side of this trend line, and some equal lows, if those get revisited, if we revisit, 18,000 or lower, I'm probably going to throw a few more bucks at Bitcoin and look for something to reverse and give us a nice bullish pattern on the right side of this trend line. So again, dollar gets weaker, Bitcoin goes up. We have plenty of technical levels to fulfill, highs to go after, pivots to go after, and we're looking to break above this 50 EMA and go up to the 200 EMA. So it's not going to be difficult to see on your chart. Look for daily closes, watch your price action, but don't be surprised if we have an earnings compression this week and next week if the market drags down risk appetite and takes it back down to lows. Okay? If that's the case, I'm looking to buy some more Bitcoin at these lows around 18,000. And I'll probably go 18, 15, 12, and that might be about all that I'm going to put in on Bitcoin for a while. And same thing on Ethereum. Even though Ethereum had a nice run, actually Ethereum outpaced the Bitcoin charts the last couple of weeks. And I'm waiting for a trend line to load here. Doesn't look like it's going to, but we came back into this, past support level, chewed into some of these pockets and inefficiencies right here consolidating. Now, if Ethereum can get a breakout, we head up into our 200 EMA. We come back and find this missed monthly pivot. And on this trend line, let me use a straight line here. I'll just redraw it on my chart, I suppose. It doesn't look like it loaded unless it shifted on me, like right there, right? Are we officially breaking that trend line? It's possible. Why is that? I guess it is a valid trend line. All right, so let me put a trend line here. And let's switch that up. There. Okay, something along those lines. So just connect the highs, and we're on the right-hand side of the trend line, but this doesn't mean it has to be a guaranteed break, right? We could be consolidating, come back and revisit the trend line, come back and revisit the lows, and Ethereum might revisit $1,000. And if that's the case, I think that's a great opportunity to look for technical support. Nice little double bottom. If this carves out a low, then we're looking for Ethereum to ultimately rally off that and get back to these highs at 3,500 plus. But risk appetite and a weaker dollar probably have to be the play. If we don't see a weaker dollar, it's going to be virtually impossible to see Bitcoin rally, and the markets like the S&P and Nasdaq, they're probably not going anywhere. If the dollar stays strong, it's going to be difficult for stocks to rally. It's pretty simple. Okay. All right. Luke, Cad Yen. Yep. Cad Yen. I talked about the one earlier, actually. So I was in Cad Yen last week. I sold it at 106.08, 105.90, 105.70. I was watching it all day Friday. And before the market closed on Friday, it was down towards the lows at 105.30, 105.35. I just went ahead and took profit. I'm looking to get back in this week. We'll talk about this in Flex tomorrow. I still see a rising wedge. So what I might end up doing is this. We have this high. We have this high. I might look to see if this blows these highs off just a smidge. Now, not blows them off, but I'm saying like goes back and retests the high or retests a slightly higher high. I'm going to look to sell this again. Right now, I don't know if I'm going to sell it at market or if I'm going to, let it do its thing and then put a stop selling like it did last week. Last week was an easy trade. Stop sell, got filled, and took 120 pips. So, I mean, I'll just kind of let it do its thing right now since the BOJ came out last week and announced pretty much the same thing. We're going to keep buying Japanese government bonds, So, but again, technically, nice bar count, overextended, daily, weekly divergence. It lines up nicely for a technical top. So, I mean, so does pretty much every yen cross, right? But we'll be watching that one this week. What's the other one? Cad Yen I did. Pound dollar, sure. Pound dollar. So pound dollar's running nicely. We're back above 2,000. I'm pretty bullish on pound dollar all the way back to 2,400. Target 1 is 2,400. Target 2 is the high at 26. So this level and this level. We come back into that little profit window. I'm looking to take some profit on these longs. I bought some. I got on the right side of this falling wedge. So I've got 5 or 6 positions in on pound dollar, and I'm looking to have that run up into this area 2,400 plus. If we peak out around 26, that is where this falling wedge started. So that's a nice spot to be taking profit. There's also some pockets back here to take some profit on and a pivot. So I'm just looking for a recovery. And again, this all lines up nicely with the dollar getting a correction. The dollar corrects, pound dollar should rally. At the very least, we come back to this 50 EMA. Makes sense. It's not an extreme bar count, but still come back to the 50. Right now, that 50 EMA is around 122. That's 130 pips away. I could see us finding that this week. We also have a July pivot, right? We find that 50 and keep correcting. We're going to rally back up here towards this 144 and 200 and find the levels I just talked about. So I'm currently long on pound US dollar and looking for that to play out. I'm also long on euro dollar. Euro dollar at 102.48. If you were with me last week on what was it, Thursday, ECB for the Flex Room for all my Flex traders, we traded the ECB. I got an add-on trade in around 102, and I'm looking to take this up to at least a pocket around 103.60. And again, 50 EMA, monthly pivot, come back in and rebalance a little bit, break some trend lines. And this outer trend line is what I'm really watching as a corrective target, right around 1.0. Let's say we just rally, not necessarily in a straight line, but, wave cycles, probably 107 to 108. We correct from parity to 107 to 108. That's a pretty good move. Hopefully that's enough to help people get out of trouble. Okay. Last week on Friday, Nimmer was asking about the dollar or the New Zealand CAD. I still like long in this one. I still like long on the Aussie CAD as well, and I'm long on both of those. We had a nice trade running on the Eurocad last week. We have a trade in at 3,000. It was like 29.90 that got filled, and then we added on. I added on at 31.90. I'm still looking for Eurocad to come back into this support level around 33.96. You can see that right there with that past support. Horizontal levels there. So if we come back to that area for past support becoming resistance on Eurocad, I'm long to that. And also on the pound CAD. Nice little bullish run off of last week's close. Hopefully the pound starts to rip a little bit. Monthly pivot at 57. Previous highs at 59.60. I'm looking for this thing to head back up into 6,000 or higher. Again, another level to form some lows for the year. Find this 50 period, come back and rebalance and find some equilibrium. 144, 200 EMA, between 6,000 and 6,200. I know that's a big area, but I'm going to be protecting profits on the way up. So pound CAD, long. Eurocad, long. I'm liking those trades. Okay, any other Forex requests? Let me take a look at the old Euro Swiss. Euro Swiss getting a nice little run off the lows. Hopefully this will start breaking trend lines. We've got lots of room to recover. I'm looking for price action to start confirming over here. We start confirming over here. I'm going to have some buy stop levels stacked up, looking for this thing to go all the way into this pocket around 103.50, and hopefully all the way back up here to the high at 105, and we have a yearly pivot at 106. So this will be time for celebration if we get old Euro Swiss to cooperate for us. Alrighty. And let me check something really quickly on Swiss Yen. Swiss Yen, I'd like to see this one forming tops and rolling back down. Bar counts, 50. I mean, look, there's a lot of similarities with a lot of these trades. Dollar extremes, yen extremes, technical levels, highs and lows, seasonality in the Forex market. I mean, a lot of stuff lines up really nicely with the technicals. I think the confusing thing this year is, are these technicals even working? Are they broken? The dollar trend's been so strong. Is it working? It will. It's just what happens. These markets gets these extremes where they get so extreme, then the extreme snaps back. They still correct. They still have wave cycles. I mean, if that's not the case, how do you have a correction in the stock market? The stock market's been broken since the bottom of 2020, right? And it went all the way through 2020, all the way into 2021, into parts of 2021, and then the correction started. But they were violent, and then they carried over and had, it's like this pendulum swing takes time. But when it happens, we have to know what direction we're trading. Okay, some of those exotic crosses. Yeah, Swiss yen, I'm on it right now here, Joe, right? You see it? So Swiss yen, all I'm looking at here is, can we just continue to hold this area? We spent some time on the right-hand side of the trend line. I'm looking for Swiss yen to carve out a top and start working its way back down into this low. That's target 1. Into this low. That's target 2. My moving target and kind of my compromise for profit is going to be down here at this 200 EMA, which currently sits around 132. So I'm actively looking for a top, okay? Actively looking for a top in the Swiss yen, actively looking for a top in the dollar yen. But when I say top, I mean, I understand there's got to be a trend line break. I understand the bears have to show more confirmation. I understand that we could have a flash crash coming in the next 4 weeks, right? I mean, we talked about it for months, that it is a possibility that these trends have been so strong. An easy way to ruin that retail crowd is to flush them out with flash crashes. So as a backup plan, I've been scaling out of some of my group trades and closing out some of my worst positions and scaling back my trade size so I can absorb a flash crash if we have it, because I think that'll also put me in a position to make a lot of money on the return. But again, we've talked a lot about that. It's not an easy way to position. I've taken losses this year that I'm not happy with, but I think it was a necessary evil for me to recover and get back where I need to be. Okay, dollar peso and some of these exotic crosses, sure, I'll take a look at that for Daniel. See, dollar peso on the daily time frame. I'm just going to stay out of this one. I mean, there's some central bank stuff going on between Bank of Mexico and the U.S. Yeah, to me, it looks like this. I mean, my trade setup would be there's nothing that I want to trade in the middle, right? We're either at this level to buy low, we're at this level, or this level to sell high. That's about it. In the middle, I'd let it do its thing. If it comes back down to the lows, I'm interested in a buy trade. It rallies back up to the highs, I'm interested in a sell trade. So and a lot of these exotic crosses, South African rand, Turkish lira, peso, Russian ruble, if you can trade that instrument, a lot of these, when they have good setups, they're great to take a trade. But if it's in the middle or it's not really clear, doesn't look good, then don't take the trade. So that's my thing on the peso is if it was at a level support, I'd be really interested. If it's at a level here at resistance, I'd be interested. We might come back up and fill that little pocket as well, right around 23 or 23.5. I would be looking for some crazy extremes and then try to sell that back down and see if this range holds. Okay. All right. Any other questions for me? What I like to do is take a little breather, wrap things up. We have class at 10 o'clock for equities on demand, and start getting some covered calls in for this week. Covered calls that expired on Friday. A lot like Halliburton. I think I've got a list right here. I did. Let's see, my notepad's gone. So saved it there. Yes. So all these notes, let me scroll this thing down. This notepad is getting longer and longer and longer. So I need to add Halliburton, Intel, International Paper, Meta. I lost some stock in a good way. I got it called away for some profit for like $11 or $12 a share, but I still have a majority owner, so I'm gonna have to go back in and recalculate my break even. MicroStrategy, I'm gonna go back in and cover to drill the cost down, and I think that's about it. MARA, I'm going to try to add another cover call on that one since it was up last week, since Bitcoin's been pretty solid. So I need to add some cover calls on these. And Alcoa got called away last week. Carvana got called away last week. Hood got called away last week, I believe. Let me confirm that. Alcoa closed last week at 46, so lost 1,000 shares at about $3 a share. Pretty happy with that. Carvana got called away for $1.15 a share on a couple thousand shares. And what was the other one? Robinhood. I think it closed above 850. Closed at 881. So I lost that for about 41 cents a share. Again, repair on some of these, make some profit, get some margin back. Off we go. Okay, so I'm going to keep adding those cover calls to drill in. We have lots of earnings this week. There's almost 800 companies reporting earnings this week. So it's going to be a massive earnings week. That earnings compression is a real deal. You might even see that in the headlines. The Fed is on Wednesday. If I don't have I'm not sure what the schedule is. If I don't have a session that I'm already committed to for Wednesday during FOMC, I will run one on this YouTube channel, but I'm not sure yet. I might be tied up with something with market traders on Wednesday. I think we have like a 3-hour event swapping back and forth, so I'll confirm that. But again, I'll let everyone know in the trading rooms and equities on demand and Flex if I'm doing my own. For FOMC, we'll do like a 2 p.m. Wednesday session, but you'll see it pop up on my channel, youtube.com/Chris Pulver. Okay. All right, traders. Traders, this week in the trading room, see you on Tuesday, Wednesday, Thursday for Flex. Equities on Man will be at the top of the hour all week long. Business as usual. All right, traders, thanks for being with me today, and then we'll be back here on Friday at 9 a.m. to wrap up the week. Thanks, everybody. If you would be so kind for everyone watching, hit that thumbs up button. Before you go, take 1 second, hit that thumbs up button for me, please, and like and subscribe if you haven't. See you Friday. Thanks. Bye.